The following is a presentation of TFNN.
Oops, I've lost sound. I don't have any sound. I don't hear it. I can't hear anything. I don't know. Oh, there we go. Wow, really bad. Okay, folks, this is Larry Pesavento for the Commodity Hour for TFNN. If you have any questions, you can call in at 877-927-6648. And what I'm going to do today is focus a little bit early in the morning, or early this afternoon, about the gold and the silver, because I would like to show you how to read these reports on open interest so you can see where the players are. First, what we'll do is we will cover the silver market, because I know many people are involved in the silver market, and it's absolutely a beautiful technical picture that we have going on in silver. Since we made the bottom back on September the 26th, we've been following a 20-day cycle. And what will happen is, if this is correct, we should bottom somewhere next Friday, I believe. Yeah, on the 19th is, I believe, that'll be Saturday. So it'll be around the 18th or 19th, possibly Monday, but we should be bottoming there. What's important about this silver chart, if you get a chance to, look at it in the Tiger Stand, it's a beautiful technical picture, especially if you like, things that we use with Fibonacci numbers and AB equals CD patterns, because you could almost write a textbook about silver. The important thing to watch is the bottoms that we've made since September the 26th. Each one of those bottoms was exactly a 61% retracement of the previous swing, and today's low was a 61% retracement off the low we made on November the 1st. And so now what we've got, we're looking at the possibility that if the market closes very badly today, it would mean that silver would be pulling down sharply into the 19th of November. Now, that falls on a Saturday, so you'd be looking for the bottom to come in either on the 18th, which is the Friday, or the 21st, which would be Monday. So that's what you'd be watching to do. So keep an eye on this. This is very important, because this is how a trend line is formed. It's not drawn, straight like off of a ruler. It has to be connected off of each of the lows, and that's how a trend line should actually be drawn geometrically, because it's a parabolic line. It's not a straight line. This is what they really don't understand the use of trend lines, and this is why when people are using bands, like in Keltner bands or Bollinger bands, basically they're the same thing, but if they do that, they're basically looking at standard deviations off of those bands, and that gives you a beautiful parabolic of how the markets are moving when they're within those bands. And sometimes when they move outside of those bands very quickly, it tells you that the trends are moving, very, very fast, and that many hedge funds use that as an entry technique. In other words, as soon as the market comes out of the trading band, it tells you that it's going to the next level, and that's usually when they start buying. But this silver chart is really worth your effort here to come in and take a look at it, because it is about as clear as the corn chart was when we were looking at corn, several months ago, and that has continued to be, pretty nice as far as holding up very well. So what we're looking at now is if the silver can hold this level that we made today. The low was around 33.25 an ounce, and as long as we can hold above that, it still has a chance to go higher. But frankly, what we've seen in gold and platinum and copper and all the others, the bias looks like it should be to the downside, because it came in pretty much as we had expected, and so I think that we're going to, be heading lower at least into the 19th of November in silver. And the main reason is that we have lower tops, and we have some higher bottoms, recently in the last month. But, basically this has been in a really strong downtrend since April the 25th. Now, the April 25th was very important for us, folks, because we were watching that market go parabolic, and, it was really, very exciting to see it happen and watch it and to see what it was doing. But what I want to do now is I'm going to take you to a page off of the Chicago Mercantile Exchange, and just to show you what it looks like when you're, just give me a second because I have to pull up the page off of my computer, which is being computer illiterate. I'm not the fastest draw in the western United States, that's for sure. But what I'm going to do here is, oh dear, it doesn't come out exactly the way I wanted it, but yeah, this is close enough. If you'll just, all you have to do is if you will go to the Chicago Mercantile Exchange website, www.cme.com, and then you just click on gold, and then you go to the futures, and what you want to do is you want to go to the area where it says settlements. If you look at the top of the page, you'll see daily settlements, gold futures final, and what we're looking at there is the average, the volume for yesterday was 192,000 contracts, 192,264 contracts. The open interest was 464.98. Now, the previous day's open interest was 455. So we had 11,000 new players coming into the market. Now, when you have 11,000 new players coming into the market, you have to have a buyer for every seller. And since prices were going down, the sellers have more power. So that usually means that there were more sellers coming into the market than more buyers. They have more power coming into it to push it down. There has to be a buyer for every seller. There's no question about that. But when open interest is rising, that means you have new players coming into the market. And if you have new players coming into the market on a down move, that means that they're expecting prices to go lower. That's the beauty of watching open interest. And if you have the volume, this is what was happening, to silver. When we were giving you, the silver was going straight up, and people were leaving the market, faster than a fox, trying to get into a hen house. So, this is why you have to keep an eye on that. When you see dramatic changes, that's what's really important. Now, what we're having now are very, very small changes, and this is not good either, because that means that you should have a lot of bullish enthusiasm. And when you have increasing open interest on a big down day like we had yesterday in gold, and it's also down today, that's telling you that there's new shorts coming into the market. That's all there is to it. So keep in mind that's how these things operate. So if you will just remember that the open interest can help you a great deal, especially when you are at areas where you're exactly at or very near, really close places where you're going to have, turning points in the market. Now, the next market we're going to look at is the gold market, because, we've had a big Gartley pattern that completed over the weekend. It actually occurred on Monday. And the 618 retracement on this was at 1775, and the market went actually up to 1797, and then it made a little tiny bit higher high, I believe, the next day at around 1803. But it's very, very close. Now, if you did the GLD on Monday, that was a home run, because that never looked back. Had you been doing the futures on the, and it was trading before market open, the market was very, very active, and if you sold at 1774 and used a 3% stop, you'd have been either got stopped out right at the high or within very, very close. So that's one of the, the disadvantages of futures. You do have the advantages of the increased leverage, but the numbers were, were spot on. And the high that we made was an exact 1.618 of the move in late October, and that came into the exact number. And so what we've done now is we've had 3 days of sell-off, just like we've had in silver. Now, what's interesting, when you look at both of them together and you look at the gold market and the silver market, just by looking at these, you can see that the silver market is very, very weak compared to gold. It's making lower highs. It could not even take out the highs from October, the 31st. So this is a very negative sign for silver. So keep in mind that if you're bullish these things, be very, very careful up in here, because, we have a spot where we could easily, have a heck of a correction. And then, that's what I am expecting is into next week. We'll be looking at that on Monday's show. Since this is it'll be Monday. It'll be Friday. So we got all next week to see what happens. So we'll see whether we're right or not. But if we do turn strong in both gold and silver, this analysis is not correct. But right now, it looks like the Gartley pattern in gold is working relatively well, and it should pull down to at least a $100 move from the high. So that would take us down to roughly the 1670 per ounce level, which is the 61% retracement coming off the 1600 level that we made on October 20th. And so that would be a spot that if you want to be long gold, that's where I would certainly take a look at it at that point. But at this level, it's certainly not it's not a place to be looking to go long, at least from my opinion. And if we also want to the other things that we were watching is the copper market. And as we were speaking last Thursday's show, we were talking about the Gartley patterns that were being made in all of these things, and we certainly made one in the copper market. It stopped exactly at the 61% retracement off of the August highs, and it also made a beautiful Gartley sell pattern, and now we're pulling back to a 61% retracement of that move, and we'll see if that actually holds it up or not. We'll have to just wait and see if that's going to do it. Now, in the stock index futures, we've had some really wild swings in this thing, and this is what we're supposed to be seeing. I mean, the market was down 400 points, I believe, in the Dow yesterday, and now we've rallied back 110 or so, which is, basically not even a 382 yet. But, these are wild swings that we're getting. This is very reminiscent of what happened in 2008, folks, before the Lehman Brothers crash. We were starting to get really wild swings in a lot of different things. And people saying the market is acting funny, it is not acting funny. It would be acting funny if it would not be hitting these numbers, so easily on the day. But in fact, it hits these Fibonacci numbers so nicely. Just the example in silver itself. I mean, the same thing, occurs in other markets. When we get back from the break, because we're almost ready for a commercial, I wanted to go into the Treasury bond market and just show you that, because all of this is interrelated, because we're talking about money. And when we talk about money, we have to talk about Forex, and that's one of the reasons why I posted the dollar index as the first chart into the show today, because it stopped exactly at the 61% retracement of that last move. And so unless we get above 78.50 in the dollar, we'll probably have a little bit of a pullback, and then we'll see what happens from that level. I'm going to also post a 15-minute chart on the stock index futures, which is the one that I usually follow is the S&P, and I will be back and show that after the break. 877-927-6648.
Are your cable rates rising? Tired of being pushed around by your provider? It's time to push back. Cut the cable and get Dish Network installed with absolutely no equipment to buy. Here's the best part. Packages start at just $24.99 a month for an entire year. That's right. Call now and get Dish Network installed free. Plus your choice of HBO, Cinemax, or Stars free for 3 months. If you call in right now, Dish Network will also throw in free HD for life. PMG Dish, a Dish Network authorized retailer, is waiting for your call and can have you watching TV as soon as tomorrow. Call 800-565-8010. Imagine all your favorite movies, sports, and shows in crystal clear digital quality for far less money, and you won't have to deal with the cable company anymore. At only $24.99 per month, they're practically giving it away. Call now for full details. Call 800-565-8010. That's 800-565-8010. Again, 800-565-8010. Limited time offer. Prices, packages, and programming subject to change without notice. 24-month agreement required. Cancellation fees, auto pay, and paperless billing and other restrictions apply. Call for details.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at DirectionShares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back. If you have any questions, it's 877-927-6648. This is Larry Pesavento for the Futures Hour for TFNN. And we were discussing the E-mini S&P futures and the fact that it was following these numbers of the Fibonacci sequence quite nicely over the last 24 hours or so. We had a very strong rally today, and the market rallied from 1218 in the middle of the night all the way up to 1245. You know, that's quite a bit of move, 27 points. And then the market backs off and stopped exactly at the 786 at the 1225 level. And now what it's doing is it's backing and filling, trying to decide whether it's going to break out to the 1254 level and complete another bearish Gartley, or if it's going to stop here and then start to move lower. Anytime we go below that 1220 level again, you know, that will tell us that the next swing will be down. And if we get above the 1242 level, that will tell us probably that the next swing will be highly probable going to the upside. But right now, it's just in a very narrow trading range for the last half hour. And you know, and this is what happens when you're trading and watching the machine too much. You know, it'll literally mesmerize you, because the monitor is not your friend, folks. It's your mortal enemy, because what it's trying to do is exude all of the psychological things that are going on in your life and equate that to money, because that's how we keep score. That's when you're long something in the market, you always focus on the upticks because you're trying to avoid pain. If you're short, you're trying to avoid down, you know, you're watching the downticks. So every time you're watching the market go up, you're feeling pretty good if you're long, and then when the market starts to come down, you start feeling really bad. The old adage is, it's goodbye house, goodbye car, goodbye boat, goodbye wife, and if you're watching it, it really makes no difference because no one really cares whether, Larry Schmuck in Tucson, Arizona is watching it or somebody in Walla Walla, Washington. Doesn't make any difference because the markets are going to keep trading. So, watching the markets is basically a very futile to do that. So just keep in mind that watching the monitor does not really help you very much. What you really should do, if you really like to watch the prices and you're an active trader and you feel like you have to be here working or something like that, if you're going to be in short S&P, let's say you sold it at the fib point up here at the 1238 level, and if it did that, then go over and watch crude oil. See what crude oil is doing, because that's a basis of getting your mind off the market, because the crude oil trend is 100% different than the trend in the stock indices. So that takes your mind off of it, and you can put an alert in, and it tells you whether you're right or wrong, and then you go back and look at it. It takes all the emotionalism out of the trade. Believe me, folks, everybody could do this if we didn't keep score with money. If it were like a paper game like Monopoly or something like that, then everybody could do it. But because we keep score with money, it makes it very, very difficult for people, to do it. So just keep in mind to try to train yourself not to look at the market when you're trading it during the day. If you're trading on daily charts, it doesn't make any difference. But if you're doing intraday trading, you want to not try to do two things. One more thing on this, since I do a lot of training with people, but the main reason most people lose is they trade too much. Too many trades during the day. And the second thing is they put their stops too close. They put them too close to where the market is trading, and then the slightest little fluctuation will, take them out of the market. And with the news that we have now, worldwide, coming from every different European country every day, they're using an excuse of who cares. I mean, a year ago, nobody cared about Italian bonds. Now that you have to give a box of chocolates with them in order for somebody to buy them. So, it's just a way for CNBC to build up their readership, and Bloomberg the same thing. They have to have something to put out there for news, and they're just not going to be putting out charts all day because nobody would understand that. But the charts are telling you whether the things are going up and down, and that's the bottom line of what we're trying to do with pattern recognition. Now we've covered the gold and silver and the platinum, gold, silver, and copper. And the next thing I would like to get into is to look at the Treasury bonds, because that's really a case study in the Fibonacci numbers. Because over the past 6 days, it has hit the 61% retracement almost to the exact time. Actually, it was over the last 7 days. It's hit it 5 times. I'm going to put that chart into the Tiger TV and Tiger Den, and you'll see that since the end of October, we've gone up to that 142.18 level 5 times in the last 7 days. Now, if we can get above that, that tells us that we're heading towards our big target of 150 to 151. Okay, we've got to pay a few bills here. 877-927-6648.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we have a call from John in Philadelphia. Are you there, John?
Good morning, Larry.
Good morning, John. How are you?
Very well, thank you. Larry,
good. What can I do for you?
Well, I wanted to ask you about the Dow.
Yes.
Question. I remember you've your background that you've shared publicly many times.
Some of my background, not all of it.
There you go. All right.
The rest of it you have to get in a post office. You have to go in and see it there.
Some of it's confidential. That's fair enough. Question. You were trading in the 70s. Were you in the markets in 73, 74, please?
Oh, sure. Yeah, I was trading since actually I did my first trade in 1959 in the spring, and then when I got into college, I did a little bit because my uncle, gave me a few $100 to mess around with. But when I got into college in 1960s, when I really started to get involved with it, and then when I started doing my graduate work in '64, I basically started trading almost every day. It was only silver. Is all I was trading. They didn't have gold contracts then, but they did have silver. And, of course, silver was only trading for like, $1.80 or something. So, and the margin was, $500. It was very small. But the market itself, you didn't have stock index futures, until August the 16th of 1982 when the S&P started trading. So you had to do actually stocks. You couldn't trade the Dow Jones itself or the transportations or anything. No indices occurred until April 16th, 1982 at the Merc.
Gotcha. Well, given that answer, Larry, I'm going to ask if we can draw upon that experience of yours. The reason being is this. Larry, I've just been going over the longer-term charts. And I'm looking at 2008, 9, 10, 11. And notice the 09, 10, 11 rally in the S&P certainly hasn't yet taken out the 2.7 high, still leaving that to be a candidate for nothing but a bear market rally. Of course, only time will tell. I went back and looked, and 1970, 71, 72 had a similar phenomenon. In other words, a significant rally for a couple of years, but didn't take out the highs. You could call it a bear market rally.
That was right. 1,000 in the Dow is what it was, yeah.
Right. Interestingly enough, in 73, the market peaked in January, fell into August. Now, in this particular year, we peaked in May, fell into August, September, that sort of thing. But in 73, very similar to this year, the market surged in October. And I posted in the den that chart just for anybody to look over if they like. After that sharp rally in October in 1973, the market peaked right around the 1st of November and then absolutely plunged, absolutely just got slaughtered into December 5th, 10th, something like that. I'm wondering what was happening at that time, and I'm wondering, is the setup that you see today, is it analogous, do you think?
I don't really, that's 40 years ago, and I don't remember. Since I wasn't doing a lot in stocks at the time, I don't remember it. The only thing I remember very vividly about the 70s was waiting in line for gas and stuff like that, inflation going crazy, and interest rates, T-bill rates at 13, 14%. So that's all I really remember. I don't have any. There are programs, John, that'll actually do, correlations for you if you want to look at it. But frankly, I just look at each market, separately, and try to find good entry points, and then see if the market's going to, react into these areas that, that we hope will go down. I believe if we go below that 1209. Either today or tomorrow, we're going to have a really bad week into the 19th of October.
Right.
So anyway, John, stay with me 1 second, please, because I wanted to ask you one other question about the formation that you're looking. Okay?
Sure thing. We'll hold.
Okay. Thank you.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to get the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yeah, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, 877-927-6648. This is Larry Pesavento online with John in Philadelphia. John, I had a question for you. When you were looking at this correlation, did you go all the way out to 1974 to see, what happened during what they called the October crash of 1974?
I did, yes. And in fact,
okay, because that was a major bottom in October, but then what happened was in December of 1974, we made a double bottom. The Dow had went from 1,030, I believe, down to about 560, as I recall. It dropped just about in half and made a bottom in October and another bottom in December, and from there it went from 540 all the way up to 14,000. So, that was a major bottom. And in fact, both of those days in October and December, John, were two of the strongest conjunction days. In other words, we had so many conjunctions and oppositions lined up in October and December. There were 7 in October and I believe 6 in December. On almost the exact same day the bottom was made. I didn't know this, of course, until many years later when I was looking at the astro stuff. But this is why it can come in handy when we have it.
Larry, you have a memory like a steel trap. That's terrific.
It's the only body part that still works well, John.
Good for you. Hey, by the way, I just wanted to tell you, thank you for posting that chart that you just put up on crude oil. Monday, you will recall, we spoke. It was just going over 95. This is the NYMEX crude, and you were advising, should it rally further, to look for pullbacks holding 95 into the fib numbers. And I notice, in fact, it was just yesterday, that crude did exactly that. Just exactly that.
I put that in there for your enjoyment, John, because I knew I was talking to you and you'd probably remember it. But this is one of the reasons, John, where I just can't do very well doing breakouts. Like if silver should break below the 33.25 level today, and it would break that trend line, going below the 618, just as soon as I would do something like that, the market would come in and rally, $1.50 an ounce, and still be bearish, be bearish. So what I try to do is to sell into strength with a place to use where you don't have to risk very much. A lot like what Tom and Steve Rhodes and Basil all talk about is that you got to manage the risk. And when you're buying breakouts, it's really difficult for at least for me to manage risk. I just I have a rough time with it.
Larry, thanks so much for your time.
Thank you, John, and I hope to talk to you again before the holiday.
Terrific.
Okay.
Bye now.
You bet. Thanks for calling in. We've got silver still is still holding above the 33.25 area. We're only about 25 cents away. It's a real critical level today if silver makes new lows, particularly if gold follows through to the downside. And, we're down quite a bit in the gold. And we'll have to wait and see if this does happen. But stop and think. These both of them came off major fib points. Silver from lower levels. In other words, it couldn't take out the highs from October. Just by common sense, folks, you got to ask yourself, why didn't this thing go up? And that's this is a little hard to be long silver here. And believe me, I love silver and gold, the coins and the bullion. I love that stuff, but trading it is a whole different story. You've got to be able to move in and out of it because these things move 3 and 5% a day sometimes, and that's where your real profits can lie. Now, the first chart that I posted in the den today was the one of the U.S. dollar index, because many things are going, step for step to the U.S. dollar index. And the high that we made today at 78.25 in that dollar index was the exact, Fibonacci retracement coming off that last high. Now, remember when I was on the show yesterday, I believe, let me see, this is Wednesday. Yesterday, it says the market was going down. I said, to watch the S&P if it goes below, 1236, and it went all the way down to, to 1218, then it backed up to, 1245. It's still within a couple of points of where I talked about, but it's below that point. Also, the euro, the price that I talked about was that 135.50 level, and we went all the way down to 134.85 in the middle of the night last night, and then had 90-point rally. These big swings that we're having, folks, this is indicative of money that is moving, and it's moving quickly. And believe me, when money moves quickly, it's usually scared. So you have to realize that we're having incredible volatility now. These are the same factors that started to set up in 2008 before, Lehman Brothers, went down into the tubes. And remember, we had lost Bear Stearns before that. So just keep in mind that we're going to see increased volatility in these markets, and they follow these fib numbers incredibly well. They follow the patterns incredibly well. They are not foolproof, but let me tell you, folks, there's nothing else out there that is foolproof. So try to, listen in to, the warning signs that we see. And the warning sign that I see right now is the one in both gold and in silver, particularly in silver, because it does have a a negative bias to it by not making new highs, and the gold in particular, because we had that increase in open interest yesterday with a big down move and another down move today. So tomorrow, when I check the open interest for tomorrow, if we have another increase in open interest with a down move, that will further solidify the fact that we are going to be going lower in gold before we go higher. People have asked, is the parabolic move still in play in gold? And the answer to that, I believe, is no. And the reason is that parabolic moves continue to go until they totally blow off. And gold only dropped $300 an ounce from the 1927 down to the 1545 level. And so, that is not indicative of what silver did. Silver lost 25% of its value or more, and gold did not do that. So gold has not made a top end to a parabolic top yet, but it's a possibility that, all we get is this retracement that we had this week at the 1800 level, and then we, start to go down. We haven't backed off very much. We only backed off $67 an ounce, from the high, so it's not, it's not that important. Now, I'm going to get away from futures for just a little bit here, because we must talk about what's happening in Asia, because the Hang Seng dropped 5% yesterday. Now, that's a lot thinner market than we have here by a long shot, so you can't take a lot about that. But if you get another 4 or 5% in the next day or two, then it really means a lot. 877-927-6648.
At As Tom says, go long, America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st. You will receive in excess of $300 in trading education. Now, back to the Futures Hour.
Okay, we got a call from Mike in Vancouver. Are you there, Mike?
I am there, Larry. How are you?
Good. What can I help you with?
I'm looking to go short the SLV, and I've got a limit sell in at 33 even. I wonder if you would raise that up to the 50-day moving average at the around, I guess it's 33.80 or so.
Well, I don't do moving averages, so I'd probably be the last one to ask that question. Basil could probably answer it a lot better for you, but what I'm looking at is the question is, I don't know how it equates to silver, because silver is trading at 33.80 here right now, and so they're making you take a little slippage, I guess, with the ETF. Is that correct?
Yes, yeah.
Okay.
32.89 on the SLV.
Okay, well then what I would do is I would leave the 33 in. Frankly, I think that's a fair place to look at it, because that means silver would have to rally about 20 cents. And, it still looks down. The things that I look at tell me that we're getting ready to break. If you looked at that cycle thing that I posted into the room today for our TV folks to look at, it's got a very positive cycle for a low to come in around the 18th to 21st of November, because the cycle was made early in the cycle. In other words, the cycle high was made real early, Mike. And so if it's correct, it should start to be pulling down into the the 18th to the 21st. So the question is, if you don't get filled, how do you enter? Well, like I said before when I was talking to John in Philadelphia, I don't do well selling into weakness. So my suggestion is to keep it in at 33. And, maybe you'll get a little bit of a rally today on the close, which is certainly possible, because, the whole world's not coming apart. The stock market's still up, and, gold's at least bouncing a little bit. So I would suggest you leave it in at that 33 level.
Okay, thank you very much, Larry.
But your stop has to be above the October high. I mean, you have to risk that amount. So I don't think that's a great deal for SLV, because the profit potential, could be at least, at least into the low 30s, like 31 or so. So that's certainly a tradable situation for you. We have more to win than you do have to risk.
Okay, thank you, Larry.
Okay, one thing we want to look at, Mike, is remind me on Monday, is we have to look at the open interest in both gold and silver, because if we get that open interest increase in gold with the big down move today, that tells us that the players that are coming into the market are shorts. And so anytime you get a rally, it's most likely going to be short-lived, because longs are going to be trying to get out of it. This is what concerns me about being long silver here. I mean, we've had incredibly good news. We had, breakouts in platinum. We had breakouts in copper. We had a big breakout in gold, from 1445 up to 1800, and yet silver couldn't even move. I mean, it was, virtually nothing. And so that's telling me that there's something is not right with the silver market. Maybe it changes overnight, that I've missed something, but right now, the way it looks, silver looks like it wants to go lower.
Yeah, it certainly does.
Well, we'll see. Okay, thanks for calling in, and I appreciate it. Folks, I want to end the show with a couple of, keep in mind a few things here. We should have some resistance up at that 1252, 1253 level in the S&P, and if it gets above the 1275 level, which, believe me, in these kind of markets, anything can happen, because they move very, very quickly. They're extremely volatile, and they're not for the faint of heart, and you've got to protect yourself, if you're wrong. So, right now the bias looks to be to the downside, but frankly, the way they jump around here, if the new Italian prime minister resigns and the new Greek prime minister resigns, who knows what could happen. Anyway, keep your stops in, keep your eyes open, and I hope to see you on a relatively modest open on Monday.